If you have ever signed a stack of car paperwork and felt physically sick on the drive home, this video is about you. That sinking feeling in your stomach is usually your intuition telling you that something went wrong, even if you can't quite put your finger on it yet. You might be paying thousands of dollars more than necessary. You might be trapped in a loan that will ruin your finances for half a decade. Or you might be driving a vehicle that you are going to regret purchasing within 90 days. By the end of this video, you will know exactly how to avoid the specific car buying mistakes dealerships quietly hope you make, ensuring you never feel that regret again. We have to talk about why this matters so much. For most people, buying a car is the second largest purchase of their entire life, right behind buying a house. Yet, unlike buying a house, which involves weeks of inspections and legal checks, people often rush into buying a car in a single afternoon. This combination of high financial stakes, intense emotional pressure, and sophisticated sales traps creates a perfect storm for your wallet. The brutal truth is that most buyers walk away overpaying, underinformed, or locked into terms they don't understand. We are counting down the worst mistakes, starting with the most common and ending with the single error that costs people the most money long term. The first major mistake, and perhaps the most pervasive one in the entire industry, is shopping based on a monthly payment instead of the total cost of the vehicle. This is the oldest trick in the book, yet it works almost every single time. When a salesperson asks you, "What payment are you looking for?" they are not trying to help you budget. They are looking for a way to manipulate the numbers. If you say you want to pay $400 a month, they can make almost any car fit that number. They simply extend the loan term. Suddenly, instead of a 3-year loan, you are signing up for a 72 or even 84-month loan. You get the monthly payment you wanted, but you end up paying thousands more in interest, and you stay in debt years longer than you intended. By focusing on the monthly slice, you lose sight of the whole pie. You stop negotiating the price of the car and start negotiating a fantasy number that the dealer can manipulate at will. This mistake becomes catastrophic when combined with mistake number 5, which we will get to shortly. Second mistake, falling in love with the car before negotiating. Here, biology is against you. Automakers and dealerships spend millions building emotional autos. The fragrance of fresh leather, the feel of the steering wheel, and the glossy paint under the showroom lights are all engineered to boost dopamine. Once you love a car, you lose leverage. Dealers are excellent at reading body language. If you picture yourself in that driver's seat or talk about where you'll drive it on vacation, they know they won. They know you're buying emotionally. Emotionally invested buyers will ignore additional fees, borrowing rates, or trade-in values to get that car. Until the contract ink dries, regard the automobile as a commodity, a metal and plastic piece. Third mistake, skipping pre-approval. Without bank or credit union financing, visiting a dealership is like borrowing money to gamble at a casino. You give the dealer full control. Using the dealership for financing risks interest rate padding. The dealer claims they can only get 7%, but their lender may qualify you for 5%. Your monthly payment covers the 2% profit the lending business keeps. Common, lawful, and avoided. A bank pre-approved check makes you a cash buyer. Dealers lose funding influence. This impacts even good credit customers who feel the dealership is looking out for them. They value profits. Are you following along and know you may have committed these mistakes? You have company. But beware, mistake number 7 can damage auto sellers years later. Stay, because avoiding that trap is key to long-term wealth. Mistake number 4, ignoring entire ownership expenses. Buyers usually assume the listed price for the car. They forget the purchase price is entrance. The long-term wealth consumption of various vehicles must be examined. 2 cars with the same price can have substantially different insurance rates. Crisis-related neglect includes fuel efficiency, tire replacement costs, and regular maintenance. Buying old, expensive autos is very dangerous. Buying depreciated, expensive cars is cheaper, but maintenance is not. A $5,000 repair expense can ruin a cheap premium automobile. Without calculating insurance and maintenance costs, every purchase risks buyers' disappointment. Purchase longer warranties and add-ons without understanding them is mistake number 5. This usually happens in the small finance and insurance office after a fee is agreed upon. The best salespeople work here. Fear is used to sell useless items at hundreds of % overprice. Talking about gadgets or transmissions breaking will scare you into buying a $3,000 service contract worth $500. They add this cost to your loan so you don't see it, yet you pay interest on a warranty with loopholes. If you buy a warranty at the dealership without reading the fine print, you'll overspend. This is a big profit center for dealers, often outperforming car sales. Trading in your old car without dividing the deal is mistake number 6. Many call this the shell game. The dealer can manipulate data throughout the trade-in negotiation and new automobile purchase to make you think you won. They may offer a great trade-in price to get you to agree. To offset that loss, they hike the new car price or interest rate. In this balance, the house always wins. They may show you a 4-squared paper that confuses payment, down payment, trade value, and price. Only by treating the trade-in as a separate transaction can you win. First, negotiate the best new automobile pricing. Only mention a trade-in when that price is locked in. They must provide you the true value for your old automobile without inflating the new one's price. Buying under pressure is mistake number 7. These are psychological weapons. Salespeople say, "This deal ends today," or "I have another couple coming to look at this car in an hour." They create scarcity to force a decision before you process the facts. They realize leaving the lot reduces your chances of buying, so they'll do whatever to keep you in that chair. They may argue the incentives expire at 5, or that the management is happy now but won't be tomorrow. This is usually fabricated. Products like cars are mass-produced. New cars, deals, and incentives are always available. Rushing due to false deadlines causes you to miss details, avoid reading the contract, and agree to clauses that favor them. A real deal will remain tomorrow. You should run, not stroll, away if they say it won't be. The biggest mistake, which compounds all others, is not knowing when to quit. Buyers' desire to depart is their most potent tool. Dealerships use the sunk cost fallacy. They wear you down and wait for hours, thinking you'll think, "I've already spent 4 hours here. I might as well just buy the car so I can go home." Exhaustion is part of the plan. Stand up and leave if the figures don't add up, the salesperson is nasty, or you're uncomfortable. Your willingness to leave changes the situation. The manager suddenly lowers the price or eliminates mandatory costs. You must be ready to depart, not just bluff. People get cars they detest and loans they can't afford by staying when they should leave. Walking away is your biggest negotiation win. How do you recover and avoid these mistakes? Your quick recovery guide is here. Get bank pre-approval before visiting a lot to know your budget. Do online research to get the fair market price of your desired car. Speak less at the showroom. Negotiate the out-the-door price, not your monthly budget. Say, "Okay, but you're looking at others too," instead of loving the automobile. Keep calm and remember that you are there to do business, not make friends with the salesperson. Keep your intellect cold and analytical to avoid manipulation. You reverse the system and benefit. Car regret is caused by predicted mistakes, not poor luck. The dealership process is meant to mislead you with math and abuse your emotions. You can safely navigate the minefield now that you have the map. You remove the dealership's control by focusing on the overall price, getting your own financing, separating your trade-in, and walking away. Avoid these blunders and your car will feel excellent for years, not just the first week. You work too hard for your money to throw it away after a poor dealership afternoon. Stay alert, patient, and go when you want. If this video opened your eyes to what's possible with your money, then don't stop here. Tap the video on your screen and I'll walk you through it step by step.